Right, so I just wanted to show a quick video of the scenario in the FTSE futures that we faced in the trade room, in the EU trade room. I posted on the Netpicks blog about this, and it's just a circumstance where there's a big potential for a move, and there are trades to be taken in between that. And the question is, do you keep on trading even if you've lost some ticks already, if you've taken a few losers? Do you just take your one and done trade early on even though you know there's the potential for a big move? Or what do you do? And my argument is that you should recognise when there is a special circumstance where there's a big move has happened already, and there may be a retracement, or say there's a breakout maybe waiting to happen, and that gives you the opportunity to capture a nice bit of profit from something that is fairly clear that could well happen. So in the FTSE followed some of the US indices after the FOMC minutes on Wednesday. They were less inclined to say that they're going to raise rates soon because of the data that was coming out of Europe, especially Germany, and US markets, US stocks rallied in particular, and the European indices followed as well. Not quite as much, but they did. You can see this move here, this little green arrow here on the FTSE trend jumper chart was when the FOMC minutes were released, and the close was right up here at 18.5, so it was actually 64.66, not 67, as this arrow shows. And there was a good potential that in these circumstances, if it starts to pull back, there could be a retest of what's called the scene of the crime, which is where the move originated from. And this happens fairly frequently. You'll notice it if you just mark down these points of origins of big moves where news events have come out, or economic releases, say non-farm payrolls. If non-farm payrolls move the market a lot, you'll often see that markets will retest the price immediately prior to that release, within either the next session or a few sessions. It just is so frequent, or they will do at some point in the near future at least. Anyway, so the idea here that I was having, we were opening right at this top end, and the chances were that if it looked lower and it couldn't find renewed buying, or it looked above this high from the latter part of that session, it would likely, if it didn't find more buyers here, it would likely start to sell into this move. And this move here had the potential to be retaken. You can see the dotted blue line here is the scene of the crime, and this is quite a big move that it had the potential from the close. It was over 50 points, I think 52.5 points, so it's a pretty decent move in there if it got going. And early on, what we had was, I'll just make this bigger so we can see. What we had is a few setups that took place that weren't necessarily great. Actually, this first trade didn't take for some reason, I can't remember why, but it would have been a winner. And in any case, if you're taking the one and done, power of quitting, in this case it wouldn't have been ideal, because there would have been some good trades later. Now, this was a trade here, I believe this was one that I took here, and this ended up being a losing trade because it didn't get to the money management target. And then there was another one which didn't make money either, and it kind of was in this sideways range. And what I'll do there is I'll just draw in a rectangle so we can see that range and basically it's not doing anything at the moment. It's building this range. It's readying itself to do whatever it has to do. Now it could be that it persists in this range, it could be that it looks up and comes back in, looks down and comes back in. But if it can't go higher and renewed selling comes in, then there's a good chance that the rest of this move will be taken out. Now you can see it's got actually to, I think this was around the 50% of the move here. It was the 50% from the FOMC release to the close that it retested just there. And then what did happen was it accelerated lower. So you see a little bit of a thrust here, slightly bigger candlesticks here. It's difficult to tell really because it's on 125 tick. If you're looking at a minute chart, it would look a little bit different. And then we got a move lower, a little bit of an inverted flag, and a stronger move lower, and it just retested that and pulled back a little bit, and then it just carried on, and it carried on. And what we got here in the end was a situation where we'd extended considerably after having pulled back to that particular point. And what this point here tells you is that this price is important to the market. So the fact that it's come all the way down here and pulled all the way back before turning shows you that this price, this 64.66, the FOMC release minutes release price, was what the market was going to retest, and it retested, couldn't find buyers, found more sellers, and it extended lower and lower and lower. Now the argument that I have here is that if you'd have just been trading this first part of the session without considering this fact, without adjusting your plan slightly, you'd have either been one and done, or you'd have taken a loss or two and not continued to trade. However, you can see that there's a great opportunity here, and although this trade didn't run particularly far, there was ample opportunity to run an additional position behind the 50 EMA here, and you can see just how far it went. It went an additional, so from this point here to 89, it went an additional 56 points to where the stop would be, 2 ticks behind the EMA, and it was there to be had. It was a fairly clear move. So that's just something to consider in special circumstances where you see that there is really big potential for a move. I think that it's wise to just save some bullets, save that ammunition to be able to take a shot at that big move, because those big moves can really make you some great money. Okay, thanks for watching.